the demise of the US currency, and other countries are beginning to trade in their own currencies, trade amongst each other in different currencies. And I think that the US has an issue with it on the long term.
Gold investors would like to understand what has driven this recent rally to new all-time highs, and more importantly, whether or not the fundamentals are still in place for this rally to be sustained and further price appreciation to be realized later this year. We'll be talking about these themes with our next guest, Shane Williams, CEO of West Red Lake Gold, ticker WRLG on the TSX-V. Shane will be talking to us about his outlook for the gold price. He'll be giving us a gold price target for later this year, and also why there's a disconnect between the spot price and the junior mining sector. In fact, the seniors as well. The entire gold mining sector has lagged behind gold. Why is that? Is this an opportunity or a risk? We'll talk about this. Shane, welcome to the show. Good to see you. Good to have you back.
Great to be on and great to be back, David.
Let's start by talking about gold. We spoke a couple months ago. You gave your gold price outlook, which we'll revisit in today's interview. But more fundamentally, like I mentioned in the introduction, why has gold gone up? Offline, we talked about how macro forces don't seem to be in gold's favor. Interest rates are climbing. As you know, the Fed has not yet pivoted. We're talking about it, but they haven't done it yet. Inflation has come down. Risk assets, stocks, Bitcoin have gone up. And so, it stands to reason that a safe haven asset like gold would lag behind, yet it's reaching and breaching new all-time highs. Why is that?
Yeah, it's certainly a bit crazy at the moment. The dynamics are different than I've ever seen before in the gold market. As you said, gold is normally a risk asset. When things are changing and risky, everyone goes to gold. But we seem to have everything going up at the moment, David. We have the S&P is going up, gold is going up, Bitcoin is going up. Interest rates are still very high and no pivot. So, look, I believe that, one of the things to be aware of is central bank buying is driving a lot. Since the end of last year or the middle of last year, they've been the biggest buyers of gold. For a number of years now, they've been buying gold, and particularly ramped up in the last 3 to 6 months. There's been huge buying of gold by central banks. And, central banks look at the macro from a very long-term basis, and they see the kind of fraudiness that's in the market, that's in areas. The US dollar, the potential demise of the US dollar is being talked about by a lot of people down the road. So I believe that they're setting themselves up and buying lots of gold at the moment. And that's driving a lot of the market and a lot of outflows from the EFTs and the market. But it's all flowing into the central banks. There's been a lot of central bank buying, and there's a lot of charts out there that show the central bank buying. So a lot of it is actually that. And gold has held up quite well, as you say, even with interest rates rising. Gold has held up very well. So yeah, I see a lot of macro setup for a gold price even rising further over the next few months.
What do you think central banks are preparing for? You're right. The data has shown that central banks have been accumulating gold. Why have they been doing this?
Yeah, look, there's been a lot of talk around de-dollarization. Central banks look long-term and large macro trends. Over the debt that the US has taken on at the moment is really unsustainable long-term. And so the demise of the US as a reserve currency, it will take a long time. It will take a while, but over time, the demise of the US currency and other countries are beginning to trade in their own currencies, trade amongst each other in different currencies. And I think that the US has an issue with it on the long term, as its currency is demising as the reserve currency. And I think central banks are seeing that, and they're beginning to go to hard assets. A lot of central banks have a lot of US treasuries on their books, and they're looking as a way of getting out of that. And gold is obviously a good hedge for that as a store of value. And I think that trend is going to continue over the next number of years, in fact.
The other trend that we should bring up is countries repatriating their gold. I'll just read you this article that I'm going to pull up for the audience here. More countries repatriating gold amid geopolitical tensions. As geopolitical tensions rise around the globe, capital markets are seeing a repatriation of gold, and the precious metals price continues to climb. So investors may also want to keep the metal close to home in their respective portfolios. You're seeing this move from west to east, where historically speaking, a lot of Western countries have been countries where gold was stored. And this is now changing because of what happened with Russia and Ukraine and the US imposing sanctions on Russia. So it seems to me that I think a lot of nation states participating in gold may have pushed up the price more so than private investors domestically. Could that be the reason?
Yeah, we're seeing that. There's a lot of outflows in the main gold major buying from the Western countries, and it is flowing east. It is flowing. A lot of gold is flowing east. And, you have two major wars at the moment, the Ukraine ongoing, and you had the Middle East sort of Gaza, Israel issues. And so people are seeing the geopolitical tensions starting across the world. And I believe they're beginning to bring their gold home to be security from a security perspective and have their own control over their own gold supplies.
So we were talking offline about gold ETFs seeing outflows rather than inflows, which is counter to what we've talked about for countries. So here's a passage from the World Gold Council. Global gold ETFs collectively saw another outflow in February, extending their losing streak to 9 months. North America led outflows, while Asia was the only region that captured inflows. Total AUM of global gold ETFs fell by 1.8% in February to $206 billion. Collective holdings ended the month at 3,126 tons, a 49-ton loss. Shane, is it a little bit bizarre to you that gold outflows have been occurring in the ETF space while prices have continuously risen?
Yeah, it's very strange. It's not normal. The last big gold run back in 2011, 12, 13, there was huge inflows of gold to into the funds, and that drove the price appreciation. This time it seems to be the opposite. And actually it's quite positive long term, because if gold begins to flow backwards into the Western various funds, that will actually be a higher price rise to the gold market. But we are seeing at the moment a lot of flows to the east, and that is driving the price at the moment, which is unusual, as I said, for the time being, for this sort of market.
Do you think then that private investors are kind of, I wouldn't say giving up, but losing interest in gold? And again, the price has been pushed up primarily by countries. Would you agree or disagree with that statement?
Yeah, I would agree with that statement. But again, as you know, some of the major investors, Rick Rule, etc., that's a contrarian sort of approach as well. Gold, normally these big investors invest in things where they're out of favor. And gold is out of favor at the moment with Western investors. And that's where we see the opportunity. That's where we see an opportunity going forward. When something is out of favor, that's where the opportunity is.
Well, that's a bit of a concern for some investors to hear, because, as you know, the price is driven primarily by investment demand, not so much industrial demand. Gold is primarily an investment asset, not really an industrial asset. So what would bring back this sentiment in gold? You mentioned that investors are perhaps losing some interest. What would bring this interest back?
I believe towards the back end of this year, as the US, I believe, is heading towards a bit of a recession. And I know the soft landing camp is quite strong at the moment, but if you look at the underlying data and you look at undercurrent, there is a bit of a recession coming in the US. And, I would say that will drive something, and a pivot by the Fed as well. Once the recession begins to kick in, I believe the Fed will pivot, and I believe that will be the turning point there, where the Western economies will start to focus on gold, and investors will get into the gold market. So that, to me, will be a turning point for the flows back into the Western economies and the Western investment.
We will get to your gold price forecast in just a minute, but I want to understand why the gold miners have been lagging behind the spot price. So new all-time highs have been passed, yet we're not seeing new all-time highs in miners. In fact, quite the opposite. If you look at the GDX index, for example, the GDX ETF is trading at about 50% of its previous all-time high, which was in 2011. So what's going on?
Yeah, I think that creates the opportunity. I mean, I've never seen that in my career, and I've been in the mining industry and the gold industry for quite a long time. That difference, that disconnect between the gold price and the gold miners, in effect. And, remember, a lot of the gold miners are producing a lot of cash flow now at them sort of gold prices. And I think one of the over sentiment has been the rising costs. AISCs have beginning to trend up, and have been over the last number of months and last year, in fact, because of inflation and inflationary pressures. We've seen the AISC move right up to 1,300 above in some areas US dollars. And so that margin that was there back in 2011 is actually pretty similar. You know, the margin is pretty similar. So, but the gold price, the gold miners haven't moved at all. And I believe that's just a matter of time. Eventually, that flow of money will go back into gold, and that will translate back into the miners, the seniors normally first, the intermediates, and then potentially into the developers and the junior explorers. It normally happens. It's just a time delay, a time lag factor.
Okay, so there's a few reasons I've heard from other people in the investment community about this topic, right? So people have said that either A, speculative money is not going to the miners because it's flowing into tech stocks or Bitcoin. As you know, Bitcoin is reaching new all-time highs. Cryptocurrencies are exploding. So that's one explanation. The other explanation is that miners are just have not been doing a good job managing growth, managing their costs, and thus their company is lagging behind the spot price because management is lagging behind gold itself. How would you respond to, I guess, both of these claims?
Yeah, look, there has been a lot of speculative in the market. You know, Bitcoin, as you say, crypto, that has had a very good run over the last number of years. And yeah, a lot of the younger investors are into those markets. You know, it's, you know, the gold market, it's not sexy, or it's not very speculative. So a lot of the younger investors go in there, and there has been huge inflows into crypto. That has taken away some of the shine and the allure of the gold and the gold miners. So that's definitely a case in point. But again, go back to our point, that should be negative for gold. That should drive down gold price. Gold price is at an all-time high. It's only a matter of time before it goes back to the miners. From a mining perspective, there has been some very, very good success stories over the last number of years in gold miners, and it becomes more of stock picking, the right companies, choosing the right companies, and being able to hone in on the right companies that have that growth and have that trajectory going forward.
You would think that, anybody valuing a mining stock would be raising the price or the value of a stock because the underlying metal has gone up. Right, so I'm just speculating here. I'm not saying this is necessarily the case, but if I'm projecting cash flows for a particular stock and the projected revenues or the projected value, net asset value of whatever's in the ground has gone up because gold has gone up, and the stock still hasn't moved, well, that's probably because the cost side of the equation has gone up as well, right? Is that true?
Yeah, the cost side has gone up over the last number of years, and we had the COVID pandemic, and we had inflationary pressures. That cost side has gone up. The AISCs of the major miners and the developers has been getting higher and higher. But again, I see that as it was a peak, and they will begin to come down over the next few years. You know, the cost of capital has gone up, and interest rates, cost of fuel, diesel, everything has gone up, and that's driven the cost margins of the miners higher. But it still doesn't explain the full disconnect. The margins, at a gold price at 2,200 sort of a range, an AIC of 1,200. That's a lot of margin. That's still a good margin for most gold miners now. A lot of gold miners today are producing a lot of cash flow, are spitting out a lot of cash flow. And we haven't seen, David, as you remember, back in the 2011, when the last big gold run, we had a huge amount of M&A. We had a lot of M&A. I think the gold miners at the moment are being very disciplined. They're generating that cash, but they're not. The last time there was a lot of M&A, there was a lot of mergers and acquisitions, which ended up badly for the miners because there was following write-downs. They overpaid for everything. And we are seeing them a lot more conservative at the moment, which would go to this narrative of generating cash flow returns to investors.
At this price level, above $2,200, are we seeing a lot more interest in M&A in the space?
I would say at the moment, there's a bit of uncertainty around how long will this continue? It's risen quite fast, in a gold sort of sense. It's risen well over from, it was 1,800 6 months ago, and now it's up above 2,200. So it has risen quite a lot. I expect that most people are still on the fence to see how long this will continue. Is it a temporary rise, or is it, because then it gets baked into long-term models, financial models, cash flow models, projections going forward. And, that starts to generate the massive returns. But I think at the moment, the people are just waiting to see the long-term view a little bit longer before they start to bring that into their models. And then they can talk about valuing themselves, etc.
Generally speaking, I'm not talking about this current cycle, but generally speaking, do the majors prefer gold to be at a lower price for mergers to happen? I mean, I would presume that would be the case, right? Because they could buy assets at a cheaper price. So do mergers and acquisitions happen usually when gold is at a lower price, or in other words, a bear cycle rather than a bull cycle?
Well, normally it happens. Obviously, the majors want a high gold price because that drives their own stock higher. It's their own value. And there's kind of a sweet spot between the majors usually move first when the gold price rises before it translates down to the developers and the valuation. So, there is that sweet spot where their own value is very high and the underlying of the developers and the juniors is not caught up to that. And that's where you see a bit of M&A in that sweet spot between the prices of the majors and that huge disconnect. As we speak now, that huge disconnect between price of the over majors and the junior developers.
Has your company experienced more interest on the M&A front? I know that's not your priority, but have you been pitched more deals now that gold is going up? Have you been approached by seniors for this proposition now that gold has gone up?
Yeah, no, not really from our side. We're quite a new story, David, as you know. We're only really getting out there. We're only really as a real new West Red Lake story from June of last year. I think we're not really out there and we're only getting or going. We are very undervalued for what we are. So, from our perspective, we would like to get the value much higher before we would entertain any sort of discussions with companies. We think there's a lot of value still to be uncovered in the West Red Lake story.
Well, tell us about the cost side of the juniors. So we've talked about some of the producing companies. So I understand that for the junior explorers, your biggest line items on the income statement would be, I guess, drilling and then followed by SG&A, right? So how have you countered inflation when it comes to drilling and also SG&A?
Well, actually, the cost of labor is actually one of the highest costs. So from a drilling perspective, again, everything has kind of gone up, but it's really focused on cost discipline, really negotiating with all our suppliers, having those discussions, we're lucky in a way. We have a very, very low G&A, so we have a very low cost to keep our company going. We have staff at site, we're moving, developing. It's about adding that value from that money, but keeping our costs down, not growing, keeping the cost minimum, focus with the teams on site to get the drilling, really push contractors to get that focus on their costs, which translate through to our own costs. But we are seeing costs across the board rising, power, fuel, etc. So it really comes back on the ability of management teams to push back on those costs and negotiate, which is something we're quite used to and driving into the business.
I'm curious as to whether or not higher interest rates over the last year and a half have changed the way or affected the way you've raised funds. Has it had any impact whatsoever?
Yeah, the cost of capital has gone up for the junior developers for sure. Most junior developers are early stage explorers. They need to keep moving forward. They need to keep drilling. They need to keep building resources, building companies. And the cost of capital, to get that capital, that cost of capital has gone up. And so that also, the ability to get capital as well as the cost of capital. So it has affected us, and we've had some pretty innovative approaches. We've just closed recently on a gold-backed note, which is a little bit different than going to the equity market, which is something that we did to minimize dilution, our ability to go and access that finance. And we were quite successful in pretty poor equity markets for sure. At the moment today, we've managed to get a nice bit of money into the company, which allows us to continue to develop. So that was something that directly affected the cost of capital, which is based on interest rates, that we were able to pivot and go down that route.
Okay. Well, we are going to come back to talk about West Red Lake Gold in a bit more detail in just a minute, but I did promise the audience we would talk about your gold price outlook. 2 months ago in Vancouver, we spoke in person. You had given me a forecast of $2,500, I believe, for later this year. First of all, are you still backing that number? And can you provide a reason as to why gold may go up another $300 or so from here?
Yeah. No, look, I still have that sort of target in my mind as we move forward. We've seen huge rises since that last meeting, Dave. We were hovering around, I don't know, I can't remember the exact number we were hovering, just just over 2,000. We're just beginning to hit that 2,200 sort of mark. And I do expect that sort of trajectory to continue. And we haven't even got in at this stage to the tightening cycle, the interest rate cuts, potential recession in the US, which in themselves would drive a gold market, gold price higher. So that's kind of why I'm at that sort of level by the back end of this year, maybe into early next year. But I do see those sort of numbers coming true because of the, as you said, we've had huge outflows of gold, Western economies outflows of gold, yet we still have a high price. As that begins to turn with the Fed pivot, which is typically a bull market for gold, once we start to see that, there'll be an extra push on the price of gold. So yes, I'm still targeting around that price for gold.
Do you see any potential headwinds for gold? In other words, any factors that could weigh down on the gold price on the horizon?
So at this stage, look, it's a black swan event potentially. When we had COVID, we had those big major issues. They tend to push down the price of gold temporarily. If you remember in COVID, most assets dipped down while that sort of thing was going, and then they rose up again afterwards. But those sort of black swan events can have an effect on gold and the overall economy of the market. Other than that, I don't see any major issue affecting the price of gold as we go forward.
Well, yes, during COVID, we had a fire sale of all assets and everything fell down together. So what you're saying is a black swan event that could push down all markets and basically collapse the stock markets, that could force some liquidation of gold. That
would force some liquidation. And obviously, when you force the liquidation of gold, there's a lot of selling, and selling of that forces the gold price to fall. So those sort of, and I do expect the stock market at the moment is very highly valued. It's way overvalued in my opinion. And that if there is a crash in the stock market, again, that will force some selling of gold and some liquidations, which again will affect the gold price. But I think that's just temporary.
Okay. Well, let's give a few updates on your company, West Red Lake Gold. Before we talk about some recent offering news, let's talk about the projects themselves. So if you want to learn more about the Mats and Rowan projects, watch our last interview with Shane, which aired 2 months ago. We've explained those in detail. But just for the audience who haven't seen our last interview, can you revisit that topic one more time? Tell us about these deposits. Just give us a general sense of the scale, the size of the deposits, and the grade.
Yeah, I think go back a little bit to, when the gold market is rising, the best way to get that leverage to gold is build a gold company. And so, you need to target assets that are near-term production, near to cash flow. And that's something we honed in on West Red Lake that we wanted to attack. So we picked up an asset called the Matson asset. Previously, it was in a different carnation called Pure Gold Mining, and so they actually built a fully operational mine that was in commercial production. And they had some headwinds. They had the COVID pandemic, and they went into the CCAA process. So we picked up that asset very, very cheap, and we're advancing that project. It's a high-grade ore body in Red Lake. Red Lake is very famous in Canada as a gold mining of high-grade deposits. And so we have an asset that we're moving forward on. We're drilling on the ground. We have teams developing. We're building a pre-feasibility study this year. And the plan would be in the middle to the end of 2025 to go back into production. So a very quick ability to get into ramp up and cash flow. If you're doing that in parallel with a rising gold price, you get a lot of leverage to that. Our average grade of our deposit is around 6.5 grams of material. And the average production, once we're in production, would be around 80 to 100,000 ounces per year. Very little capital to spend go forward, and all permits are in place. So it's really a good position to be in a rising gold market to leverage that price.
From what I understand, these are brownfield projects, right? There's been previous drilling and exploration on this site before. So why are you confident that the site will find new deposits if much of the deposits have already been depleted, if I understand correctly?
Yeah, there has been a lot of work done on the deposit, but there hasn't really been, in the recent history, Pure Gold, who were there recently, haven't really done a lot of drill. They only operated for 12 months pretty much. So they haven't done a lot of work. Previously, historically, there was a lot of mining in the area, but there is a lot of areas that we've found already that are new areas that we're advancing into. So there's a mix of older areas which have additional ore in them, which is drilled out and ready. There's 3 million ounces on the deposit potentially as we move forward. And also on the other areas, the new areas, these were areas to grow. So yes, we have a lot of potential to grow the deposits.
You recently closed a $22 million offering deal. Tell us about that.
Yeah, I go back to my earlier comments. The cost of capital is quite difficult for junior developers now at the moment. And so we needed to come up with an innovative way to keep the project and the company moving forward, but at the same time to minimize dilution for our shareholders. And that's kind of how the gold note came out. It's particularly applicable to a company like ourselves that are near-term cash flow into production.
So what is a gold note? Can you explain that?
Yeah, so it's basically like a fixed term debenture based on paid back in gold. Once we get into production, it's paid back in gold. Gold is allocated and sold on the market, and that return is used to pay back the investor on the fixed term.
Okay, so that is an innovative way to finance. I guess the assumption is that investors trust you to eventually start producing. So I'll just ask you, why are you so confident that this project will eventually start producing?
Well, again, it goes back to when you're doing a project, you have all the infrastructure in place, you have no permitting to do, you have no everything to move ahead and not a lot of capital to do. So that gives us a lot of confidence that we can move forward. And it was in production, it was operating, so it was making gold, it was everything else. So that's kind of why we picked this structure. From an investor's point of view, also, it's a link to a floor price of gold. So it's paid back based on a gold price of $1,800 gold. Everything above that, the investor gets the extra benefit to that price. So, if I believe, as you say, gold at 2,500, there's a lot of returns for the investor. And from the company perspective, there's minimized dilution. So it's it's a good story. It's a good win. It helps us minimize dilution, but at the same time allows us to advance the project.
I'm just curious, do they receive gold at spot price at the time, or is it locked in with the contract?
No, it's sold at spot. So at the spot at the time, they receive gold at spot. And the floor is $1,800 gold. So that pays back the initial interest at 12% interest, which is like a fixed. But everything above that, the investor gets. So at gold at 2,500 is sold, the investor gets the additional return on top of the $1,800 gold.
Interesting. Before we talk about what's next, give us an update on recent drill results.
Yeah, so we've had some really exciting drill results we were talking about these new areas, Dave, and we've really got into these new areas called the North Austin Zone and the South Austin Zone. And these are really new areas. And most of our drill results earlier this year and into last year were focused on these areas. So they are close to surface. They're close to our existing infrastructure. These are priority areas for the company. And we're drilling those. We're adding a second drill to our program now to really hone in on these areas. It's really about de-risking the restart project. So that's really been exciting. And there's quite a great results on our website over different drill results, different areas. So we are seeing a lot of growth opportunities as well when we go in and drill these areas.
You and I will speak again soon, and we'll give an update on not just your projects, but talk about your vision long-term and exactly how you plan to transition from an exploration company into a production company. So we're going to get into more technical detail as to how that transition will take place. But for now, just give us sort of a teaser of the timeline. So we're currently in 2024. Do you have an estimate as to when you may be in production?
Yeah, our plan is to do a pre-feasibility study at the back end of this year. We've kicked it off already. We're doing our drilling on ground. That's a pre-feasibility that should be done by the end of this year. And that will be used as a base to launch the project. And the plan would be to launch the project in 2025, towards the back end of 25, to be in production and potentially in commercial production, which is another process, in early 26. That's sort of a high level at this stage. We need to get the pre-feasibility done and locked down, but at a high level, we're targeting, the back end of 2025 for production.
and any challenges you foresee that you need to overcome before that hurdle is breached?
Mainly around, at the moment in the mining industry, getting access to people is an issue, and so we're lucky we're in the Red Lake region of where there's a lot of mining, but trying to get a ramp up, get the right people in the right time is obviously something we're quite concerned about, and obviously access to capital. Again, the markets, as you say, are pretty poor for gold developers, gold equity, and so that access to capital are some areas that we're focused on at the moment, trying to come up with those innovative type solutions like our gold note we recently closed.
I spoke to Frank Justra, who is a major shareholder, I believe, of West Red Lake Gold recently. He said it's a great value. I asked him why he's been involved.
It's a great opportunity. And so we bought, I don't know how much you know about West Red Lake, but we bought it out of bankruptcy. It was a fully built mine, fully permitted, with a couple of million ounces in the ground that the previous management messed up. Being quite honest, they just messed it up. Too much debt, too much in a rush, made too many mistakes, and it went into bankruptcy. And we bought it for a very low price.
And so they got rid of the previous management team. Can you just comment, without going into too many details if you don't want, but what exactly are you doing differently now than the previous management team?
Well, the previous management team, one of the key points about that group was they were more exploration, early stage exploration group. And they didn't have a lot of experience on building and operating mines. And so we saw, as Frank said, that we saw a lot of mistakes that they made along the way, or a lot of things. By putting in the right team who understand how to build and operate mines, you can put a lot of de-risking strategies in place. One of them is we're taking our time. This mine was in production. We could go back into production if we wanted to. We're deciding to step back, do some more drilling, do some underground development, do the right studies before we look at putting the project into plan. They went forward very quickly. They put it into production. They had a couple of constraints on debt, etc., to move quickly. And we're ability to step back and do it properly and de-risk the project before we go in. And that's one of the main differences we're doing with a new team and a new approach.
Okay, so we will follow up with you next time on your path towards production in a bit more detail. But let's finish off today on the markets again. Let's circle back on the markets. You told me offline, when we spoke offline, that it's never really a good sign when things like gold and Bitcoin and stocks all move up together at the same time, especially gold and Bitcoin. These are two, some people say they share similarities in their fundamentals, but really they're very different assets. Why is it that both of them moving up may not be a great sign for investors?
Yeah, I think both of them moving up, particularly the Bitcoin, is very a speculative asset. It's a very speculative asset. A lot of people get it. It's a very speculative asset. And normally, I believe some of them move in opposite directions. And so a lot of the market at the moment, as your viewers will know, the stock market is very overextended a little bit, as I believe it is. We have Bitcoin moving in all-time highs, and we have also gold moving at all-time high. And this is more of like a speculative bubble. We've seen this before where everything goes up. It's only a matter of time before the fundamentals catch up a little bit. And you see later this year, you see recession potentially. You hear early recession, potential cuts in interest rates. And I believe that will take the wind out of the sails of these assets. And that's really where you want to be in gold, as a hedge to those recessionary headwinds.
Appreciate your time today, Shane, and we will follow up again soon. Where can we learn more about West Red Lake Gold and keep up to date with the updates in the meantime?
Yeah, so we're on the TSX-V under WRLG, and so also on our West Red Lake website, westredlakegold.com.
Thank you. We'll put the links down in the description below, so make sure to follow West Red Lake Gold online and on the social media. Appreciate it, Shane. Speak again soon.
Excellent. Thank you very much, David. Thank you.
Thank you for watching. Don't forget to like and subscribe.